So, why is the stock market, why has it gone up, and which we sort of know right now, how long will it last? What's going to cause it to potentially pull back? Well, it's a great question. There's plenty of uncertainties that are out there right now. It's been actually quite remarkable, how low the volatility has been up until the last few weeks. The stock market has looked, past the damage done in 2020. It's looked, past the uncertainties with trade wars in China and uncertainties with COVID and the outbreak and uncertainties with the election, and really focused on this, broad-based recovery that it's expecting in 2021. Whether that's the case or not is anyone's guess. So much of it will be based upon, again, the availability of a vaccine or therapy and the spread of the virus. But one of the things that, most investors are focused right now on is the election and what that means for the stock markets. This election may be different than others, so I'm not going to say it's not. But you can see, there really hasn't been any major concerns in the past about a market decline, in previous election years. Clearly, if you look at the top chart, you'll see the best year for the stock market historically has been the third year of any president's reign, if you will. That's not surprising. That was 2019, and we often remember back at how strong the stock market was in 2019. But even in 2020, where the stock market is sort of flattened out from where we were. But in an election year, what we've seen is we've even seen positive results there as well. So where the concerns are, lie in Congress, in my opinion, and that's what the bottom of the chart really suggests. What is the makeup of Congress after this election, and what does that mean for the stock market? What's odd, right, in all of this is that if you look at, there's right in the middle of that chart, there's a blank, right? There's not a bar. That represents the makeup of a Democratic president, right? A Republican Senate, right? And a Democratic House. We have actually not had that experience, right, over the last, let's call it 70 years. So how does the market react in that type of scenario? Well, we don't necessarily know, but most of the situations that, or the makeup of Congress that we've seen in the past really haven't seen any type of meaningful negative impact on the stock market. This time may be a little bit different. Again, it's very politicized. There are two very different parties at this point in time. They're very disconnected in a lot of their views. What I would say, though, is, if the concern that investors have over a stock market collapse, right, because of the election, is because there's going to be changes to legislation, then really what you want, right, is a divided Congress, right, which means that the Republicans would have to maintain majority in the Senate, and the House obviously looks like it's going to stay Democratic. That dividing Congress, that gridlock, while it may not be so great for the economy, means that there's not enough majority to overturn any of the legislation that has been put in place over the last, call it, 4 years, right? So the reduction in corporate taxes, the deregulation of certain industries, we can make a case that has certainly helped the economy and supported the stock markets. And the concern would be, if again there's a Democratic sweep, could they actually look to overturn some of that, raise corporate taxes, re-regulate, and what impact would that have on the market? So, there are going to be market-friendly and unfriendly components of each one of the administration's agenda. That's a reality. Again, gridlock, which seems, it looks like more and more likely than it did just a few months ago. The Senate has now, looks like it's flipping back to, at least if you believe the pre-polls, flipping back to Republicans. So it is quite possible that you have that gridlock, and not a lot of legislation, will be passed. And just kind of look back to 2017 and 2018 real quick. That was really the 2 years where Republicans were successful at passing legislation, because it was the time right before the midterms where they controlled all the chambers of Congress as well as the presidency. That's where they cut taxes. That's where they deregulated. And so the moment that the midterms hit and the Republicans lost the House, right, all legislation really dried up, with the exception of certain executive powers. So why that's important, again, is the makeup of Congress will really drive what the legislation process looks like going forward. In my opinion, again, I don't see the stock markets collapsing with any result. I would say the most market friendly result would probably be a divided Congress at this point in time. Even if there is a change of administration and a Democratic sweep, there are still certain elements, right, of the upcoming administration's agenda that are still very positive, right, that still could support the stock markets. And one of those, as you can see on this chart at the very bottom, is infrastructure.